Yo, what is good, guys? I hope you're all doing absolutely amazing and are trading safely in the markets. It's your boy VGOK here, and I'm back with another case study video for you guys. Now, this particular trade was an absolute monster of a trade, as I closed the majority of the position at a 1 to 60 risk to reward ratio. Now, although this was a really successful trade, I still wasn't able to capitalize on it as much as I should have, as I actually missed out on an earlier opportunity for the US30 buy the day before. And the actual missed opportunity, it was a trade based around that FOMC news release, which I'm going to be going into a lot more detail for you guys in just a moment. So as you guys can see, we've got the before screenshot of the trade I actually managed to take. And right here, what we were looking to base our main sort of point of interest off of was this base rally that looked to take out that previous supply. And now this was valid previous supply. It was an area of point of interest for me prior to it actually moving up and taking that out. But as you can see, you could see where I was looking at this point of interest. We had this liquidity build up here. We had this buy to sell movement. It looked like it was breaking structure to the downside right in here as well. So I was looking for points of interest and potential distributions happening around this zone here. Didn't get that. Instead, we had this whole base rally taking that out. So that became our new point of interest to concentrate on. So using that as our point of interest and then seeing how it reacts into that zone, we see it coming into that zone quite nicely. We get a really good rejection, and we do get a break of structure above as well, above this point here. So that was enough confirmation. I had enough validity to start going for this trade. So in the end, I had my entry at this imbalance fill right in here. Stop loss around this low of at this point here where it first entered that demand zone. And obviously we were targeting a lot further up, which I'm going to go into in just a second. Now, this was actually how the trade played out. So as you can see, this is obviously after the trade had played out, but this is how the price action was around the entry. Now, I did get in as it touched the entry right in here. I market executed around this point in here. So at this point here, it was very sort of good. It was in, pretty much instant profits. But it was in this move here, where I had to just sort of be brave and believe in the analysis. We had really, really good price action coming away from the initial zone. So, if it was to sort of go below this low, then this whole idea would be invalidated and, we'd be looking for lower prices. And seeing this sharp movement down at 12 o'clock right here, that was something that I was just sort of watching, and, it's not something I wanted to see at that point, for me to put this at risk-free, it would have to sort of be breaking above this point here. Then I'd be happy to put it at risk-free, but it didn't quite get there. It started consolidating just below that point. We did get that big decline right here. It didn't violate the low, so it was still in the trade. So obviously it went into drawdown a little bit, but we were still getting good rejections, and it was just about sort of believing in the analysis and just sort of bearing through that consolidation right there. Now, this was where I took one of my first sort of TPs. So I started to take off a lot of my position. Obviously, this is a higher time frame supply zone which I was sort of looking at, so I took off a lot of my first sort of profits, just to put the profits at break even sort of point at this point here as it touched this first supply zone. So at that point I moved my stop loss into profit, and I took around sort of about 0.5% to 1%, however much I was risking, off the table, so I was covered, and essentially this was a risk-free trade then. And it was at this point I was just sort of recording and sort of just taking screenshots as it goes along. But the final point at which I took about 80% of the actual trade off, and it is still running as we speak right now, as I'm recording this right now on Friday. Obviously the trade was executed on Thursday. This is the Friday, so this is actually quite fairly live, this price action. But this is at this point I've taken off around 80% of the whole position, and at this point it was hitting that 1 to 60 risk to reward ratio. Now the main reason I've taken it off at that point is obviously when we go into the lower time frames, we'll be able to see that in this movement here we've got this buy to sell movement right in here. I was basically looking to take out the majority of the position as it retraces back up and fills in these parts of imbalances, and at that point there we can see that it was hitting that 1 to 60 risk to reward ratio. So jumping straight into the actual analysis of this and looking at it on TradingView so we can actually see, and just looking back at how price is developing right now, it looks like this is going to reaccumulate. So that final sort of 10 to 15% I've got floating on this position, I'm going to be leaving it on over the weekend, just in case it does decide to go any higher. But at this point, I've taken off most of the position, and we've banked a decent amount of profit. But jumping into how we actually got into the entry, and I'll go into, obviously there was a couple of bases and points of interest which never actually got met prior to the actual entry time. So let's put the kill zones back on, and jumping it into the 1 minute time frame, and looking at yesterday's price action, so that Thursday's price action, Thursday the 14th of October. And as you can see right here, this is where I got the entry right in here. Now, just taking it back to the London session movements, it was this base I was really interested in looking at, getting a reaction from this base. We just didn't quite get into there, but we did break structure from this movement up. So I was in two minds of really, putting any entries within here, having a buy here, having the stops down in here. Now, obviously, it depends on your broker, depends how big the spreads were, but chances are you probably would have got broken even. Or you probably would have hit, sorry, not broken even, you probably would have hit stop loss if you went for this buy, because you would have had your stops literally at the low point right in there. And, looking at how low that came, pretty much about sort of perpetual to distance of that stop loss. But in the end, it did carry on moving higher. And as soon as we broke above this, I knew we could start looking at different sort of bases for the points of interest. So that brought me to this base. So we're looking at this rally-based rally right in here. And I'm going to cut the chart off just so you can see how I derived those bases. So just looking at the 5 minute time frame, I think, yeah, here we go. So, we've got supply pushing price down, creating lower highs and lower lows in this small retracement move down. And then we have this rally base rally movement, which takes out, the majority of all of this supply. We've got this momentum trend line sort of working its way down right here as well. So, you've got these trend lines sort of forming here, and you've got that sort of rally, reaccumulation, rally, or rally base rally that takes that out and sort of proves to us that markets are going to be bullish. So just exiting out of this replay mode, and let's just jumping back to the actual price action. So this was that new base we were looking at, and again it didn't quite get into there. And as we swap it down into the 1 minute time frame, and let's cut the chart off around here. Sorry, yeah, we didn't quite get the price action coming into the base that we were looking at right here. Instead, we got it coming down to about here, reacting into this base in here, and then it decided to move higher. And then, like I was talking about on the screenshots, we did actually have the distribution that I was looking for around this sort of area. So that the bearish point of interest I was looking at was this one here. And this was the main sort of point of interest. This is how we sort of derive the main point of interest, which I mentioned earlier, was looking for distribution as price gets into this zone here. Of course, we didn't get that. We got a immediate sort of violation of that point of interest. And looking at things again, we did have that rally-based rally that took that out, and that was what our main point of interest was sort of based on. So if changing it to the 3 minute and the 5 minute, now on the 5 minute you can see that there was a sort of an imbalance fill in that area. But of course, on the 1 minute, it looks a lot nicer because you can just tell where that base is going to be. And if I was to change it to the 2 minute, you can definitely see a lot clearer, that rally-based rally formation that we like to see. So at this moment, we've got another POI. So I think just considering at this point, we've had 1, 2, this is the third point of interest where it's not, got into it. So, at this point, I'm not going to lie, I was losing a bit of patience. But, then again, looking at what time of day it wasn't even sort of, New York session hadn't even started. It was still pre-New York session. So, I was thinking to myself, let's just be patient and sort of just believe in the analysis that I'm going to have. And as we sort of forward the price, so there we have it coming into that first point of interest right there. That was that reaction we wanted to see, and then we have that break of structure above this point here. So this was the entry I was looking for, entry in that imbalance field like I said earlier, and the stop loss at the low right in there. We then forward the price, and we get that wick into price. That was where I looked to enter, had a market execution around that point, and then we get really good bullish price action to follow. Now, as you can see, it did go down afterwards like I explained earlier, but for me to put this at break even, I'll say it again, it needs to break above this point. Once we break above that point, we're basically broken out of this sort of trading range, this trading channel. So we can essentially then look at further POIs to take this even higher. But because it never really did, it kind of did a sort of second mitigation of this imbalance fill, and then seeing this sort of aggressive move down, I was very sort of hesitant at this point. I was either going to close out the trade early, which you kind of should never do. You should always sort of back your analysis, but I'm I've been sort of prone to be doing that in the past as well. But as we see this sharp move down, I was thinking, what the hell, let's just leave the actual stop loss there. If it's wrong, if it does get violated, then we know that this is going to be a bearish market. This is not going to be sort of a bullish market. So if it does, maybe it just needs to come into this sort of last sell to buy candle a bit deeper, and then it wants to shoot off. So then as we sort of see what happens, get that consolidation, and then we get it breaking out of that trading zone. So after this point, I had enough validity to put this at a reduced risk to start off with, because there was still a chance that price could come down into these imbalance fills in here to then sort of go higher. But then once we break out of the next trading range, then we can put it at risk-free, no problem. So as we sort of see what happens at this point here, once we've broken out once more, I'm pretty much very happy now to put this at a break-even position right here. And as we sort of see what happens, and as we zoom out, we can see how price does develop. It just constantly goes up for the whole day to pretty much. We had a 1:30 p.m. news event right in here, which caused the consolidation, that sort of pause in price, and then we obviously had, you know, that 2:30 spike, which gave price more momentum to the upside, which was fantastic, almost hitting that first TP zone at that next supply zone. Didn't quite hit it yet, but the first TP, I think it was hit once it reaccumulates once more and then goes higher. So in this moment here, when it touches there, that's first TP hit right there, and I believe that was a 1-2. I believe that was a 1 to 21 risk to reward ratio around that first sort of TP, where I was looking to take, you know, not a lot of money off the table, to be honest, because at that point I had my trade risk free and I only wanted to, you know, bank some sort of profits, you know, maybe 1% or 2. Now at this point, I wasn't sure what was going to happen, but I was in deep profits at this point, so I was just like, let me just leave the trade and hold it until tomorrow. Worst comes to worst, we're going to hit break even, and you know we've not lost any money, so that's always good. But you know, the best case scenario is going to continue higher up into that supply zone, which we had right here. And the supply zone that we had, I think it was based off of the 4-hour time frame, I believe. No, it was the 45-minute time frame I was looking at. So, you know, we had this drop, the base within these little wicks in here, then it dropped off again. So that I had to start the point of interest from that base and up to this last buy to sell candle, because there was still an imbalance that existed in between there. So that was the whole sort of point of interest I was looking at to take off, you know, some sort of profits. But there was always a chance, you know, it may look to continue higher, because looking at, and this is what I'm going to get into later on, where about those missed opportunities, you know, it did get into a very, very good demand zone the day before on that Wednesday. So, you know, around that point, and obviously you guys can see that other position right in here, which I missed out on. Now, carrying on with the actual analysis of the trade we actually took, I simply did not know when to close this trade. I'm going to be totally honest with you guys. Now, at this point, I'm not too sure. I'm just going to sort of wait and watch. And I was like, let me just hold it until Friday. I'll wake up on Friday and see what it's doing. If it continues to be bullish on Friday, then we can sort of manage the trade accordingly. And sort of, if it's still bullish by that 2:30 p.m. spike, then, you know, we'll take off most of it at that sort of spike. And that's sort of pretty much sort of my thinking about when to sort of close this trade off, because I just had no idea when to sort of look at closing it. So going into the 5-minute time frame right here, and if we get out of replay mode and skip it to obviously today's price action, you can see it definitely went through that point of interest very easily overnight in Asian session. And obviously the TP which I looked to take profit at was right in here around that 1 to 60 risk to reward ratio, which was fantastic. And basically, yeah, it was fairly simple sort of spot where I was looking to take the profit out. So if I extend this out, we can actually see, as I saw this buy to sell movement, obviously this was after the 2:30 p.m. spike today. So obviously on the Friday we had further bullish price action, but then afterwards we get this really strong decline to the downside. Now technically it didn't really break structure. For it to break structure it'd have to be below this point, but at this point, you know, I wanted to secure some profits before the weekend, and then obviously close off a majority of the position. Obviously we had this buy to sell, so I was looking to close it off at the open of this buy, also lined up with this imbalance fill with this base drop in here as well. So that was sort of the main sort of reasoning behind sort of closing it off there around that 1 to 60, or roughly a 1 to 61 risk to reward ratio, which was absolutely fantastic. So it was around a 600 point gain. And obviously, if you guys know the way I trade, I hate holding trades overnight. So I was I was panicking over this trade because I just don't like holding overnight. But in the end, it paid off. It worked out well. So happy days. So I've just gone over the whole trade breakdown of the trade I managed to catch, but I actually want to go over the price action from the previous day, which I was looking at as well. So before looking into the actual how we looked at the trade, I want to just go over the sort of points of interest on the higher time frame points of interest first. So first of all, I think it was all based off of the 4 hour and above. 4 hour and below. Sorry. So just looking at this once more, yeah. So the daily didn't have it. The 4 hour didn't really have it. It was the 2 hour time frame. Sorry. So the 2 hour time frame, it gave us this sort of doji candle followed by the very aggressive rally to the upside. We can definitely see in this part here, it's making higher lows and higher highs. We've got this low, high, higher low, higher high, higher low, higher high. We're in a very definite uptrend. And obviously it can be simple to see this right now, and obviously it'd be simple to see why you wouldn't want to be sort of, you're definitely looking to be traded higher than this point. But at the time of when I was trading it, I just didn't see that. I definitely knew that I wanted to look for buys here, but I took the trade on the following day. I did not successfully get the trade on the Wednesday before, right in here. So we know that this is going to be a good point of interest. We've got a lot of imbalance following the sort of institutional candle right in there, and that's the point of interest that we're sort of concentrating on. Now, as we sort of step it down into the 5-minute time frame, we can see all the scalping and intraday price action. So we've got all this movement coming down here. We've got this redistribution of price in here to push price lower eventually, and for it to finally get into this area right in here. And as I move into the 1-minute time frame and put the kill zones back on, we're gonna step back to, obviously this was that higher time frame 2-hour point of interest which I was talking about, which is this purple box, and we're just going to watch sort of how obviously it gets into that area. Now this again should have been a successful trade, and I actually used my experience from this trade in the following trade which I actually successfully took. So it's quite a funny story, to be honest. So as we actually look at it, we had this big rejection of price. At this point, it didn't really break structure, any significant structure, which I liked, but I could tell why people would think that this is a nice point of interest to have. So the point of interest I'm talking about right now is this one here with this that I'm highlighting in this box right in here. So in here you can see there's a rally, base, rally in here. For me, I really wanted it to sort of break above here, then I'd be looking at this. But it didn't quite break above it. It came into it early and then went up higher and broke the structure. So then the new point of interest which I was looking at was this one. And I did take an immediate entry on this. I literally sort of got in around that Wednesday. It was around this point the market executed once again. And then we got a break of structure above that point. And then we got it pushing up into this point here. Now, at that point, once I saw this movement up, I was like, okay, great. We can now look to put this at a break even. So I moved my stop loss to basically to my entry point, and as it came down again, it actually broke me even, which was very, very sort of frustrating at the time and annoying. Because as you can see what happened afterwards, it did come into it, it consolidated a bit, and then it shot off. Now, if you remember back to the actual position I took, that looks very, very similar to the price action that followed my entry the following day on the Thursday. So as you guys can see, it just went into a little bit of drawdown, it consolidated a bit more, and then it shot off, into profit. And then, if scaling it to the 15-minute time frame, just for argument's sake, so we can see now holding this to the actual final TP which I took for the second trade. We've missed out on a 1 to 28 risk to reward trade right there. We've missed out on that 1 to 28 risk to reward trade, and up to that supply zone would have been that 1 to 17. So it's been fairly frustrating not getting in on that trade, just to see it not even hit the stop loss as well is a big kick in the teeth. So that was the one I missed out on, as it touches that initial demand zone. Now the second opportunity which I missed out on, and this was solely because on this Wednesday I'd been analyzing since 8 a.m. until around sort of 5, so it was a full day of analysis, and I didn't have it in me anymore to further my analysis any further. And I'm going to go over basically what happened. Now on this Thursday at 7 p.m. we actually had a news release. So as you guys can see, on this Thursday, October the 14th, we had, on the Wednesday, October the 13th, we had the news release coming out, and that was at 7 p.m. we had the FOMC meeting. Now this FOMC meeting is all to do with the the USA interest rates, essentially. And the FOMC meeting came out. It was released at 7 o'clock. The meeting happened, and usually around that time you're getting a lot of volatility with those US dollar pairs, especially with US30 as well. So at 7 p.m. on Wednesday, we're just going to have a look at the price action, and zooming in around that sort of time around here. Now if I put a vertical line at 7 p.m. you're going to see why exactly, and see exactly the sort of reaction we had at that point. As soon as we hit 7 p.m. we get this downwards movement happening within this candle, so I'm going to get rid of that line now so we know where 7 p.m. is. We get this downwards movement in here, and we get a very strong move to the upside. We get a very strong move to the upside, so there's definitely volatility coming in. So at this point I was just sort of monitoring, because end of the day this is outside of my sort of ideal time to take trades. Now after seeing this, we had a very strong move to the upside at 7 o'clock in that 1 minute candle. A couple minutes later we see price reverse to the downside, and for me, that's a valid break of structure to the downside in my eyes. So as soon as I saw that, that was the break of structure right there, because it broke below there. We were able to sort of go for positions based off of this right in here. So I actually did place a sell in this zone here, and I was looking to hedge this. So we did have a slightly larger stop. It was about a 33 point stop, which isn't too bad for US30 to be honest. And I was looking to target within this sort of base within here, right here. And it did eventually, obviously, as you guys can see, that was the first TP that kind of got hit. It was only a 1 to 2.8, but I was just sort of hedging myself, whether it wanted to be bearish after the news release or bullish after the news release. So I was just sort of preparing for both scenarios, either bullish or bearish. Now, obviously, I got the sell, which went to plan. I didn't really close off any profits at that point, I'm not going to lie. I just moved it to risk-free. But at this point here, we can see how price developed afterwards. We got into this base as I was talking about just now. So there's the base, and as you guys can see, we've got this making higher lows and higher highs. So we're still in an uptrend in this moment here. We've got low, high, higher, low, higher, high, higher, low, higher, high, higher, low, higher, high. And as you can see, between that higher low and higher high, there is a base there that has not been respected. All the previous bases, they've kind of been sort of met and respected and mitigated, apart from this one. This one hasn't. And obviously the one in here, the point of interest in here from this low to this high, it did get met sort of within that spike, that volatility spike for the FOMC news. So I knew we could look to definitely potentially take trades here for the sell side, and definitely we can at least take our first TPs around this point here. Foolishly enough, I didn't really take any TPs at that point, I'll be truthful. I just moved the stops to break even. But as we see price getting into this base here, we see price gaining more momentum, and it's not like a slow movement up, especially in this move here. That's quite an aggressive move up, and it was getting quite late. It was around 8-9 p.m. I was sort of winding down for the day and sort of spending time with family and stuff. But there was a hedge which I had marked out, but because of the time of day it was, I just simply didn't look to take the trade. It was as simple as that. And this was the hedged buy, which I didn't essentially take. It was a 25 point stop, so slightly better than the sell, but this was the one that I didn't take. It was based off of this last sell to buy candle that really looked to sort of get back in, and it was in this move which broke me even on this initial sell. So I was thinking, okay, great, now we can look to go for these buys now. And obviously, as you guys know, the sort of movements that happened, because it was a later entry, you'd definitely be looking to hold that overnight. There's no point sort of holding it, just for an hour or two, because you're going to be in Asian session. You might as well hold it until the next trading day. So into the 5-minute time frame, we can see how this FOMC missed opportunity would have been. And again, up to that initial supply zone would have been a 1 to 17. Up to the take profit point, which I've closed the trade I managed to catch, that would have been another 1 to 33. So essentially I've missed out on around 40 to 50 reward from not taking these two or unsuccessfully getting these two trades in. About 50 reward, but to be honest, I did make it up fairly well, I'd say, my own opinion, of getting this 1 to 60 the following day. So happy days. So there we have that full breakdown of that 1 to 60 risk to reward ratio trade, and the full breakdown of the two missed opportunities which could have given us an extra 50 reward on top of our original trade. I hope you guys really enjoyed the video, and if you did, please do give it a like. Also, don't forget to subscribe if you're new around here, and turn on the post notifications as well to stay up to date with all the future videos. Thank you guys so much for watching, take care, and I'll catch you guys in the next video for more of that trading sauce.